In this video, we're going to be covering Las Vegas, San Diego, and also Orlando for investors and also non-investors. We're going to be talking about the housing market in those three cities, so stick around. Hey, what's going on, guys? This is Daniel, one half of the Kwok Brothers. Now, today we're going to be talking about three cities and their housing markets for investing and also non-investing. Those three cities are Las Vegas, San Diego, and also Orlando. We're going to be covering coast to coast today. But before we go ahead and begin, guys, don't forget to subscribe to our YouTube channel and like this video. It really helps us out with the algorithm. All right, without further ado, let's go ahead and let's start with Las Vegas non-investors first. Median home sales price is now $310,000. That's an 8.8% increase year over year. Now, guys, all these numbers are from September and October. I'm predominantly looking at late September and early October to kind of get a fuller view, because a lot of times month to month can kind of be a little scattered. Number of homes sold the last 12 months, 2,732. That's a 12.7% increase year over year. So obviously higher prices, a lot more transaction volume in the city of Las Vegas. Median days on market, 39 days. That's a minus 22% year over year. That's a 22% decrease compared to last year, 2019. Sale to list price, that's 98.6%. That's a 0.51% increase year over year, meaning that if you listed a house for $100,000, the sales price most likely is going to be $98,600. That's 98.6%. Homes sold above the list price, 22.5%. That's a 45.4% increase year over year compared to last year. Homes with the price drop now is at 13.3%, meaning that out of 100 homes listed, 13.3% of those homes are going to be sold with the price drop, as opposed to 22.5% of homes being sold above the listing price, which is still crazy to me. Okay, so 13.3% homes with the price drop. That's a 16.1% decrease year over year. Now, here's what I think when it comes to the housing market, so non-investors. I think the market was already hot before COVID. In all honesty, I remember back in 2017, a lot of even investors looking to buy single-family homes. It was one of the hot markets, which makes sense because Las Vegas housing market faced an appreciation rate of 8.31% the last 10 years, starting from 2010 up until now on an annual basis, which, by the way, puts Las Vegas top 10% in the US. So would I buy right now for non-investing personal residents? I'm leaning no. Overall grade, I will give it a C minus. All right, let's go to Las Vegas for investing. The average rent now stands at $1,186, which is a 7.93% increase year over year. One bedroom's at $1,033, which is a 9.58% increase year over year. Two bedrooms, we're at $1,263, which is a 12.03% increase year over year. Now let's look at some county data. There is a 27% drop in multifamily and apartment complex construction and rehab year over year compared to last year. So 27% drop. 25.3% increase, however, in single family construction and also rehab compared to last year, year over year. So overall thoughts, less multifamily and apartments being built, but at the same time, the rent isn't slowing down. We faced almost an 8% increase compared to last year in rent. So rent isn't slowing down, but less apartment complexes and multifamily being built. That shows me supply and demand looks pretty good for an investor. So depending on the cap rate, on the neighborhood you're buying, I would say, yes. I would give it a yes right now in terms of would you buy right now in Las Vegas for investing purposes. But obviously, only if the deal is right? It's got to cash flow within the first 30 days. There's got to be some good upside. Downside risk has to be mitigated and hedged. Overall grade for investing, I would give it a solid B. San Diego, let's go on first with the non-investors. So San Diego housing market, median home sale price is at $701,529. 14.6% increase year over year. I can't imagine that's the high number. Number of homes sold in the last 12 months, we're looking at a solid 1,500. That's a 20.4% increase year over year compared to last year. Median days on market, 15 days. That is a decrease of 46.4% compared to last year. 15 days. Wow, that's crazy. Sale to list price is 99.9%. I'm not making that up. I got those numbers National Association of Realtors, Redfin, Zillow, you name it. That is a 1.2% increase compared to last year, meaning that if you listed a home for $100,000, you would most likely sell it for 99.9, right? So $99,900 is what most likely you would sell it for. All right, homes sold above the list price. We're looking at 43.7% of homes that are listed tend to sell above its listing price, which is a 69% increase year over year. Homes with a price drop, 12.3%. That's minus 7.7% year over year compared to 2019. So overall, it looks like the typical SoCal market, low inventory. Reason why the low inventory, however, I believe is due to the pandemic. Why? Because, well, during times of pandemic, there's a lot of financial uncertainty. During financial uncertainties, it tends to decrease the transactional volume for pieces of real estate, which is why we have such a low inventory crisis right now, I guess. Obviously, you can include the 15-year lows in foreclosures because of the forbearance programs that we have right now, along with the 15-year highs in delinquencies that obviously are not flying off the books with banks and different mortgage companies. So would I buy right now? No. And overall grade, I would give it D. D for Daniel. All right, now let's look at San Diego for investing purposes. So average rent, $2,237. That's a 4% increase year over year compared to last year, same time, 2019. One bedroom apartment, you're looking at $1,922. That's a 1.3% decrease year over year. You heard it, folks, decrease. Two bedroom, you're looking at $2,370. That's a 3.5% decrease compared to year over year, 2019. County data, 1.5% decrease in multifamily and apartment complex construction and rehab year over year. 4% increase, however, in single family construction and rehab year over year. So not much change in construction. There's not a lot of, back and forth, but the decrease in rent specifically with smaller counts in bedrooms tells me more families, obviously more 3 bedrooms, more 4 bedrooms that are being prevalent, and younger people moving in with parents, which makes sense because obviously due to the pandemic, we saw record highs in millennials moving back in with families. So not big of a surprise. I do, however, like the big student population in San Diego. There's a lot of great schools there. So would I buy right now? Overall, no. Overall grade for investing, I'm going to give it a C. Okay, now let's move on to Orlando. Non-investors, median home sale price is at $275,000. That's a 7.8% increase year over year compared to 2019. Number of homes sold, 1,279. That's a 5.4% increase year over year. Median days on market, 21 days. That's a 25% decrease year over year. Same time, right, compared to 2019. Sale to list price, 97.8%. That's a 0.24% increase year over year, meaning if you listed a home in Orlando for $100,000, you're going to sell it most likely for $97,800. All right, homes sold above the list price, that's a 19%. That's a 37.2% increase, meaning that 19% of all homes listed are going to sell above the list price. Homes with the price drop, however, 17.8%. That's a 5.5% decrease year over year, meaning that 17.8% of all homes listed on the market will sell at a discount with the price drop. All right, so low taxes. Here's what I like about Orlando. Low taxes, lots of tourism, immense growth in population, immense growth. I think they've been top 10% for the last 3 years with millennial migration, and that's huge, especially for our generation. We are right now, but we are more so the future home buyers, sellers in the housing market. So I like that. So would I buy right now? Yes, but wait if you can, because I really do think in 2021, we will see a housing market crash. Overall grade, I would give it a B-, all right, B-. Now let's look at Orlando for investing purposes. Average rent in Orlando is $1,447. That's a 1.52% decrease year over year. One bedroom is $1,278. That's a 0.86% decrease year over year. Two bedroom, we're looking at $1,516. That's a 0.46% decrease year over year. Now let's look at county data. So we are seeing a massive increase. 206% increase year over year in multifamily and apartment complex construction / rehab. We're seeing a 30% increase year over year in single family housing construction and rehab. So here's my overall thoughts on Orlando for investors. Rents seem to be stagnant. I'm not gonna say that they're decreasing because I don't think we're seeing that big of a decrease, to be honest. I know but we're looking at 1.52% decrease year over year compared to last year, which honestly is not that much, right? You're talking about $10, $15. But the rents are stagnant and there's a lot of supply coming in, especially with 206% increase in construction and multifamily rehab and apartment complexes. That's some pretty serious stuff. So between the two, it tells me there's a lot of competition coming in. Would I buy right now? No, because I think it's a shark tank. I think there's a lot of big boys playing in the city of Orlando. Not interested in competing with the big guys, especially when the rents are not following with that supply and demand curve. So overall grade, I would give it a C, right? Give it a C. But hey, they got Disney World. So thanks guys for watching this video. Hope you guys enjoy. I'll see you guys in the next one. If you guys want to comment down below what cities you guys want me to cover next, please do so. And of course, don't forget to subscribe to our YouTube channel and like this video. Thanks guys. I'll see you guys next one.